Hello, guys. A very good afternoon, and welcome to another very interesting session of the Unfiltered Chat. My name is Shreyashi Chatterjee, and I am your host for today. Today we have a very sensitive topic to dive into. Like, it is sensitive and it concerns a lot of startups, you know. And the first thing which comes in mind when we are starting a business or starting a startup is fund. And along with that, it's fundraising. So if you are somebody who has done fundraising before for yourself or for somebody, you know it's a very daunting task. Okay. Especially for a startup, it's more challenging. You have to find the right investors. You have to communicate your USPs. Also determining the amount of funding you require and the terms and conditions which is associated with the fund which is coming in, and also manage your expectations. So there are like so many things to, dwell into. And if you're doing it alone, if you have two, three people on board, it's equally challenging. And this is also like, it's like the very resilient startup owners, they also become like, fatigued. They come across decision fatigue, which we tell, and they feel pressurized and they get isolated and they start questioning their decisions and everything. To solve the problem and the challenges, we have somebody today with us, and he will be shedding some light to how to overcome this problem or this situation rather. Let's present to you our guest of the honor, Mr. Devansh Lakhani, the Director and Startup Fundraising Expert at Lakhani Financial Services.
Hi, Shreyashi. How
Hi,
are you doing? And
I'm good. How are you?
uh, I'm doing great. I'm doing great. First of all, wishing good evening to all your audience who's going to watch us live today through this platform. Wherever they are from, and from whichever city, whichever location. But if you're watching this live, good evening. And I'm glad to be here, Shreyashi. Thank you to you and Soumyadeep from the Unfiltered Chat to invite me for this live podcast, live interview. I'm very happy and glad that I'm here. Uh,
Same over here, Mr. Lakhani. We are equally pleasant and we are equally happy to have you here and to speak with you. I was just mentioning our audience that, fundraising is a daunting task. It's a very big challenge, be it a startup or be it, like anybody.
yeah,
You as the director and startup fundraising expert, so I'm sure you are the right person to basically shed some light on the issue.
I hope
So,
so too.
okay, as I can see that you have more than 35,000 followers on LinkedIn, like a lot of congratulations for you on that. You post a lot, and there must be followers who interact with you through your posts and ask you for financial advice. How does it make you feel?
First of all, it is very uh, you know it feels good that after a lot of hard work and a lot of efforts has gone into building a certain community. So it feels good that starting from 2000, we've reached to around 36,000 odd community on LinkedIn itself. So that's a good feeling. But having said that, it comes with its set of I would say expectations that the community would continuously have on me, and which is very fun, like which I really enjoy, which we as a team enjoy it a lot to have a good set of expectations from the community, that we can constantly keep on posting good content out there on finance, on investments, on startups, on business, on growth, on entrepreneurship. Sometimes quite a lot of posts are on my own personal stories. It feels good that I can share a certain part about my life to the community also, which is any interesting maybe for me. Sometimes it is not for them, sometimes it is too much interesting for them. So it is good. Having said that, when people ask questions on finance, it is really good and amazing to see that people are really taking interest in knowing different aspects of finance, different aspects of business. in the comment section when I hear questions about, let's say I had posted on, how does the Ola auto, like, Ola cabs or an Ola auto model, sorry, it was Ola auto, yeah, rickshaw, Ola rickshaw model work. And that was from my personal experience, because I was going for an early morning flight from my home to the airport. So I took a Ola auto, and I was just chit chatting because I was literally bored at 5 a.m. in the morning. So I was chit chatting with the auto driver, and I asked him a lot of questions about numbers, about his revenue and stuff like that. So when I posted it on LinkedIn, that same conversation in a text format, when I posted, so there were quite a lot of comments which were like, oh, is that so? People are making such good money in Ola Auto, and that's the kind of revenue that they are making. So it is not a simple job, but at the same time, for a person who is uneducated, it is high, like it is rewarding him to a pretty good extent
Yeah.
also. Yeah, so those, I mean, people, and those people who are commenting were not from finance background. Many of them were just students, many of them are from engineering background. Quite a few of them from like BTech, or those kind of background also. So it's good that people from various backgrounds are taking interest in businesses and startups in finance. So it feels good, and I'm happy to reply to them whenever I can, whenever I do get a chance to go through all the comments. I do reply to them and try to solve their doubts if they ask, or just try to interact and engage with them.
Yeah, that's like, it's always you get to learn from anywhere. That's like, your incident from the, Ola auto driver is definitely an example. So you
Yeah.
have been in the financial, yeah, you have been in the financial advisory sector for a very long time. So were there any early influencers or role models that sparked your interest into the field of financial services and entrepreneurship?
There has always been one very constant, and then a couple of them who have come little later on. But one always very constant when I decided to pursue chartered accountancy and started getting interest in stock markets and investing in general. Uh, one one guru whom I've just looked and observed and read about him, read his books and stuff, has been Warren Buffett, right? So he is the legendary investor, value investor, so to say. I don't think anyone can ever get close to him. What he has built, the way he invests, the way he has a 20-year horizon. I mean, today we are just talking about 3 years, 5 years as long term. He thinks of it as 20 years, and that's how he has multiplied his wealth over a period of last 60, 70. He started investing when he was 11, 12-year old, and and now he's probably 90 plus. So he's been
Yeah.
investing since 80 years. So he's created like billions of dollars of wealth in his portfolio. And the way he invests, one learning from him has been that always invest in cash flow producing companies. Cash flow producing means you have to be positive cash flow, and you have to continuously generate cash flow out of that business, right? So that has always been one learning. So today also, if I invest in any stock, if I invest in startups, or if we are raising fund for a startup, we look at a startup which is EBITDA positive, which is going to return some cash back, right? Maybe first 1 2 years might be little bit of a problem, but eventually it should turn profitable. Eventually it should turn cash flow positive, right? And it has to give you something back in return, that business. Otherwise it's not a business. It's just a hobby that you're trying to pursue and making a loss out of it regularly. So yeah, I mean, Warren Buffett has been my all-time, investment or finance guru or a business guru, whom I have never met, but he's like an online guru, basically. Other than that, there have been quite a few. One is Robert Kiyosaki, the famous author of Rich Dad Poor Dad. Again, his mantra of
Right.
cash flow and wealth creation, investments. Another has been Grant Cardone, who
Okay.
is again America's best-selling author. He's a real estate mogul. So he also does invest. He never invests in stocks. He only invests in real estate. So I've learned real estate investing through him, though I've never done it because the ticket sizes are very big in India, and I've not reached that level where I can invest in a real estate. But what I've learned from him is that even he invests in cash flow producing real estate. So real estate which is producing monthly rental income, monthly passive income. That is the kind of real estate that he invests. So again,
Mhm.
a very underlying thing about all these great investors from different asset classes, like Robert Kiyosaki invests in mines. He invests a lot in mines, right? So from there also you generate cash flow. It's a business. uh, Grant Cardone invests in real estate, only rental income producing real estate. Warren Buffett stocks, but only cash flow producing companies. So the bottom line has always been cash flow producing assets. And those assets will always reap you good wealth generating and compounding returns over that 8, 10, 15, 20 year old horizon. So yeah, these have been my few people that I've always read. I've tried to read uh, you know
Mhm.
uh, to learn more about investing.
That was very insightful, honestly. I mean, now I can see a lot of people have started, have taken, baby steps for investing through Zerodha. So I'm
Yeah,
sure this, yeah, your role models can become their role models as well. So,
yeah.
coming back to Lakhani Financial Services, so your current role as a director in Lakhani Financial Services, it indicates a significant chapter in your career, of course. So what drew you to Lakhani Financial Services, and how has the company's ethos influenced your approach to leadership?
I started LFS in 2018. So it's been 6 years odd now that we have been running LFS as a bootstrapped, investment advisory firm. Um, what drew me to it was was a sheer, thing that I thought that I should not be working for someone else, where probably I could make a little bit more money by working for my own self. That was a very small thought at that point in time, and little did I know what is entrepreneurship, little did I know how to run a business, little did I know how to lead, little did I know how to raise funds. So everything was very little at that point in time, 6 years back. And though it was just a small gut that okay, let's try to do something. I have age on my side, so why not take the risk? I have tried to accumulate little bit of capital through 2.5 years of job. So कुछ भी नहीं होगा तो I can always go back to job, right? I'm a CA, so job तो मिल जाएगी अच्छी खासी. So that was not the problem, and that's how I took that plunge to launch LFS in Jan 2018. And we started off really slow. We started off really in a naive manner in investment advisory, portfolio management, research, etc., which was a very crowded market, and I didn't understand also what is the market size, how I should shape my business, how I should think about growth, how I should hire. Nothing did I know then. So 2 years, so it was just only me running, trying to do something out of it, and slowly, steadily, I figured one step by the other, and tried to get into investment banking, fundraising, and eventually startups happened just before COVID hit, like 5 6 months before COVID. And we were one of the probably just a few advisors who took that plunge in the startup ecosystem. And COVID came in like a blessing in disguise, wherein startups took a huge
Yeah.
growth. uh, I think before that, startups was not really well known, right? We just knew Flipkart,
Mhm.
Amazon, Mintra, Jabong, Ola, Oyo. बस यही बड़े startups only we
Yeah.
knew. This is I'm
Right.
talking about 2019, mid 2019, kind of a year, right? So 5 years back, approximately 4.5 years back. So that's when LFS started picking up a lot when we pivoted into startups. Before that, it was very basic. one two member team, not much. Then LFS started growing because of startups ecosystem. Also, we found the gap that startups are needing capital. They're needing a lot of business advisory. They're needing a lot of business modeling. How to pitch to an investor, how to create a deck, how to do valuation, and those all things I had learned in my preceding 4 years of experience, because I was always into investment banking and corporate finance in the job also. So I had learned that, and I thought, let's apply that. So once we started applying, so slowly, steadily started, really taking shape. And we raised funds in COVID. Just before COVID, we raised one for one startup. Then in COVID, in April or May 20 or April 20, we raised for another startup. Then again, June, July 20, we raised for another startup. So slowly, steadily, that momentum started building, um, which led to one thing led to the other, and slowly, steadily, and then 2000, like till today, like we've raised funds for 15 startups. We've advised 350 plus startups. So yeah, that's how it has been. So touch wood on that thing, basically. Yeah.
Yeah, definitely. Yeah. So, can you please precisely tell me that according to you, what are the mission and vision of Lakhani Financial Services?
Uh, I mean, see, our vision is very simple. We are basically, we want to build India's best investment banking firm for startups, and take it global. So it is made in India for the world. We want to help 1,000 startups over the next 5 years with their strategies, with their growth, connecting them to the right investors, business growth advisory, etc. So our vision is to help 1,000 startups in that, and to raise funds for 100 startups in the next 5 years by 2029 odd. Uh, so that is something that we've started doing. It's a very long journey. So that's precisely the vision. Like, we want to be you know the best investment banking firm in India, to serve the globe, to serve the world, basically. So that's about it, like what we want to do in one line.
That's really, and that's what I wish that you reach your mission and your vision by your stipulated time. So let
Yeah,
me tell you, Mr. Lakhani, that there are viewers and audience with us watching us live. So one of
yeah.
our viewers, Mr. Pranay Pandey, has asked a question. Hello, Pranay, Mr. Pandey. What challenges? So Mr. Pranay Pandey is asking that what challenges have you encountered while establishing Lakhani Financial Services? Thank you for your
Yeah,
question.
see, while starting out, there were no challenges, because it was a simple thing. You just had to leave the job and start. So as such, no challenges per se. Yes, it took some time to leave the job, though I was contemplating it for 2 3 months, and so that was one. But yeah, while establishing it and to take it to where it is today, though we are we are not very big today, but to take it from where we started till where we have reached today, of course there has been a lot of challenges.
Mhm.
A few of them, if I have to name one, and the most important, has been hiring the right talent. Because we've seen in this ecosystem, the more I try to notice, the more I try to read, though I try to stay away from all the news and the negativity, but the more I try to see is that many of our competitors, they had really spoilt the market by underpricing and by delivering bad quality services, etc. So it was always that the industry was getting a little bit of a bad name. So to hire the
Mhm.
right person, so that that person can give good quality service to our clients, was the most important challenge in all departments, I would say. Because it's a service industry, it's always going to be people oriented, right? By the people,
Yes,
for the people, of the people.
yes.
So hiring has been the most important challenge, and it still continues to be, and it will always continue to be. Today we are probably 14, 15 people. Even when we reach 50 people, 100 people, to hire the best talent and to retain them, a bigger challenge than to hire is to retain. So that is the most important challenge that we've tried to wherewithal in the best possible manner that we can. Not always we are successful, not always we fail, but we try to create a good environment for our colleagues, for our team members. Everyone is work from home, so it's always good for them, but we try to create the best possible environment with rewards, with recognitions, with
Mm-hmm.
offsites, with we've also done a program wherein we uh, help them, or give them a certain amount of reimbursements for their upskilling, certain amount of
Oh, okay.
reimbursements for their own personal well-being, where they can buy a
Okay.
Netflix subscription, they can buy a YouTube subscription, they can go to a
Wow.
spa every month. So we are trying to do best possible things for our team members, so that they also like the environment of working, and it's not just one way around that
Yeah.
we exploit them. That
Mm-hmm.
should not be the case, and that is what our competitors were doing, and hence the name of the industry was getting really affected. But we are
Mm-hmm.
trying to make it in the best possible manner that we can for our team members.
Wow. That's really nice actually to hear. I'm into employee experience as well, so I'm definitely taking up some points from there. So I want to ask that how has Lakhani Financial Services positioned itself in the dynamic financial landscape?
Yeah, interesting question. I think this positioning is a very key word that you use here, right? Because see,
Right.
marketing सब लोग करते हैं, advertising सब लोग करते हैं. If I were to tell about my competitors also, like they've spent thousands of rupees on Google ads to get leads, right? But
Right.
there has never been a positioning from there. What we are trying to do is completely, uh, you know, um, what do you call organic, in way
Mm-hmm.
of branding. So the positioning that we have tried to do is that we are an investment banking firm, right? An investment banking firm is a firm which helps the startups to raise funds and helps the startups to get fund ready, right? So it's a
Mm-hmm.
very clear cut positioning. Like when you take an investment bank to the size of Edelweiss or JM Financial or Motilal Oswal, so when their investment banking division comes, they help the startup to do IPOs, to raise the funds for their IPOs, to do the entire DRHP process, red herring book prospectus process, so on and so forth,
Mm-hmm.
right? But that's a IPO. Their laws and everything is different because of SEBI and listed companies.
Right.
That is what we are positioning ourselves as, a startup investment banking firm,
Okay.
right?
Okay.
Where we help them to raise funds by way of debt, by way of equity, and do the
Mm-hmm.
entire fundraising process from documentation to advisory to valuation to due diligence to connecting to the right investors to getting the funds to do the closure of the deal, to doing the term sheet to the shareholders
Mm-hmm.
agreement. If it's a convertible note, then a convertible note agreement, everything.
Okay.
So from for anything regarding to fundraising, we'll do. So we don't put our hands into anything else. Let's say if someone asks, okay, can you register, like, because I'm a CA, many people try to ask me that, can you open a company for me? I'm like, no, we don't do that.
Okay.
We are not specializing into that, nor we want to position ourselves in the market as
Mm-hmm.
one stop shop for everything. We are not a one stop shop for everything. We are a one stop shop for your fundraising requirement. So that's the
Okay.
positioning that we are trying to do in the ecosystem. Because there are see multiple angel networks, multiple people who just prepare documents, right? Like a pitch deck or like a
Mm-hmm.
valuation report or something. So they are
Right.
just a service providing, document providing company. There are
Okay.
multiple angel networks like Mumbai Angels, Chandigarh Angel Network, Indian Angel Network, right? Now these guys, they don't do any documentation work, but they just have a syndicate of angels through which they try to
Okay.
raise the fund for the startup if they like the startup, and then if the network likes the startup. So their model
Right.
is completely different. Their model is based on investors. They take a fee from investors, right? Many of them in the starting used to confuse us with an angel network, but we had to clarify a
Okay.
lot in the start. We are not an angel network, nor we are just a
Okay.
document preparing company, right? We are an investment bank. Everything regarding to your fundraising is something that we will take on. From first step to the last step of your funding, we will do. And we do this in
Okay.
house, except for a couple of legal things which we outsource to our legal partners. But that is done under my supervision. So that's the only outsourced part that we do in the entire fundraising process. So yeah,
Okay.
we are an investment bank specializing in helping early stage startups to raise funds. So in my sentence also I use early stage so that there is no confusion. We don't do series A, we don't do series B. Early stage means
Okay.
early stage up to pre-series A, with some early revenues. And that's why the word early stage. So I use it very specifically in my introduction, in my anything. We are an investment banking firm specializing in helping early stage startups to raise funds. It's a simple one liner, it covers all the things, tries to put the positioning out there.
That's a very intelligent move, honestly. Because you can stay away from the crowd and the competition at the same time you will be in the, like the race. And that's really nice.
Yeah.
So, I mean, you know. Okay, so as I said that there are some live audiences with us, watching us. And next question is from Shomadip Mondal. So Shomadip is asking that what are the key factors that investors look for when considering a startup for fundraising? Thank you, Shomadip,
See,
for your.
thank you, Shobhadi, for your question. So, key factors which an investor will look in a startup, right? I think what we call it as the 40s. One is team, right? So, an investor will always look at the team, the founding team. What's their background? What's
Okay.
their education? What's their experience? Right? What are they bringing to the table? Are they really
Mhm.
effective in terms of executing the idea, or they're just blabbering and they're just on the idea? Right? What is their experience? Have they founded something in the past? Have they given some exit to any investor in the past? So all those credibility factors. So one is team.
Mhm.
Second is TAM. So total addressable market. How big is the market? Right? Though sometimes I don't necessarily when so Shomyodip asked for investors in general. So investors in general look at TAM. If you ask for me very specific, I look at SOM, serviceable obtainable market. So which is
Okay.
TAM, SAM, and SOM. So I look at that
Okay.
uh, the most micro SOM that is there, right? But investors look at TAM. Why I look at SOM is because to understand that actually what kind of market are you going to cater to in the next 3 to 5 years, right? What are your competitors doing? How big have they built their company, right? Let's say if your competitors are just you have 7 to 8 competitors, everyone has built, let's say, 50, 60 crore brand or 100 crore brand, then the total
Mhm.
revenue that your competitors in the organized market have just built 400 crore market. तो 400 करोड़ में आप कैसे स्केल कर पाओगे? What are you trying to build in 400 crores? You know,
Okay.
in that respect. So I look at that SOM at from a bottoms up approach also. I just don't look at TAM because TAM तो सब लोग India is very big market, तो सब लोग वो 1.4 billion वाला population को accumulate करके they just say that no, I can do this much, right?
Mhm.
But that will not make real sense. Third
Okay.
point is uh, team हो गया, TAM. Third is technology. So what is your tech in terms of the platform that you're building or the product that you have? How scalable it can be, right? Do you have an effective tech team to scale that up, right? So
Okay.
tech is the third thing, and the fourth is traction. So revenues in terms of traction are very important.
Mhm.
So these are the typical four things that an investor would usually see in terms of investing in a startup.
Okay. Wow. I got to learn a lot of things today. I don't know about the audiences. I'm sure they're learning, but I over here is learning a lot. So the next question, so the next question is from Anindya Das. So Anindya is asking that what types of funding options are available to startups and how do they differ in terms of requirements and benefits? Thank you, Anindya, for your question.
Thank you, Anindya, for your question. So, Anindya, what kind of options are there? There are two, three options. Main options are, of course, equity and debt. In debt, it is very like debt again has two, three options. One is revenue-based financing. One is unsecured loan. One is secured loan, right? So, revenue-based financing is on the basis of your revenues, where you get a certain amount, which is probably 1 to 1.5x of your monthly revenue as a small working capital to be invested majorly in marketing and inventory, right? ये generally B2B SaaS companies में they get more, and D2C or consumer brands they get this revenue based financing. Second is unsecured loan, which is again of course it is unsecured, so there is no mortgage, there is no security, comes at an interest rate of 18 to 24% per annum. So that is there. Again, you can typically expect anywhere up to 2x of your monthly revenues as a unsecured loan disbursement. Third is a secured loan. Secured loan you typically get from a bank against a security of your asset, right, where the interest rates
Right.
can go down to 10 to 12% also. uh, but this is majorly used for companies which are at least 2 3 years in existence. They have some assets to really
Mm,
park it as a mortgage, but generally startups ke paas itna assets they don't have. So there it becomes little bit of a challenge that they cannot get a secured, but they usually go for an unsecured or a RBF if debt is the option, right? Second is equity. The second major head is equity. Under equity, you have two, three. One is equity, pure equity, which comes at a valuation where you get equity shares, at a certain rate, which comes after you have arrived at a proper valuation figure. So that is a pure equity deal, right, where the requirements are, of course, you have to do the valuation, you have to do negotiation, you have to do a lot of compliance with the ROC. You have to file a lot of documents with the ROC, and it takes time. This kind of a deal takes at least 4 to 6 months odd. So that's one. Second is a convertible note. A convertible note is very simple, wherein you're trying to convert that at a later stage in equity. By issuing the equity at a later stage at a discount, right? So that is something which happens, which is very simple, cost effective, time saving. So it's a very good mode for an early stage startup to raise funds, right? And third is again convertible cumulative convertible preference shares, CCPS, which again you don't need to really get into the valuation front much, but you can
okay.
give a certain discount, and few like some bit of your time and money gets saved in terms of issuing a CCPS, because again you don't get into a lot of discussion on valuation and negotiation, but it's more about investment for the long term. But again, there are a lot of compliance that you have to do for CCPS with the
Yeah.
ROC. So compliance is again there. Convertible note is the best for a very early stage startup.
Okay. I'm sure India got his answers from the options which you laid out. So there are a lot of people actually who have joined us. I just want to thank them. Shubhra Jyoti, Arpita Chakraborty, Anindya, Sudeshna Ganguly, Sudeshna Das. Okay, so our next question to you is what role does the pitch deck play in fundraising and what elements should it include?
So pitch deck is, of course, it is the most important thing after a business plan while raising funds from an investor.
Right.
It is like the entry point to an investor's home, right? So it is that first impression is the last impression wala thing, right? So if your first impression is good, of course, you will have a lasting impression. It is like when you have uh, you know uh, gone on a date with your boyfriend or a girlfriend. You want to dress up, you want to look your best, you want to smell your best, you want to feel your best.
Right.
So it is like that. You have to dress your pitch deck in the best manner, with the best content, with the best design, and then send it to the investor, so that you keep a lasting impression to that investor. So it is in that manner. I think you have to have many people where they falter, or where it becomes little bit of a problem what today's founders are not understanding, or many service providing agencies who prepare decks, they don't understand,
Okay.
is that you have to have a really good content and research backed content, and
Mhm.
crisp content, right?
Right.
And neat and clean and beautiful designs. That
Mhm.
point is really missing in today's decks, right? Because as an investor, we get multiple decks in a day. So how to say that, okay, which is going to which is going to stand out? So standout के लिए that look and feel should be really good. Then I will have an interest to read further inside, right? फिर business आएगा. पहले तो the look and feel will come, right? But that
Right.
is something which is missing, where founders need to understand that if
Mhm.
you're putting something in a deck, it has to be really crisp and clear, well researched, just not a broad based kind of a research, on Google, but something which is really more deeper than that, by talking to different, investors, different founders, different industry experts, right? I think that makes a huge amount of difference. And not to, when people are putting, like, seriously, when pitch decks come to us, they have been as long as 50 pages. So 50 pages deck, who is
Mhm.
going to read, right?
Exactly.
There have been decks that come to us which on every slide they have filled up proper, like, huge essay kind of content.
Um,
So no one is going to read that, and this happens
mhm.
at least 60 to 70% of the times,
Okay.
right? So the essential part in a deck is going to be crisp and clear and precise content, and beautiful designs with good elements, with good fonts, with good color combination, good infographics, etc., which conveys a proper story to an investor.
Mhm.
So that's how it should be.
Okay. So I think the message has been put front. So next question I'll pick up from Sudeshna Ganguly. That Sudeshna is asking that how can startups effectively identify and target potential investors that align with their business goals? Thank you, Sudeshna, for your question.
Thank you, Sudarshana. So, how can startups effectively identify and target potential investors?
Potential.
See, yeah. So, of course, you need to first of all understand which sector you are in, right? And then try to connect with certain investors. Maybe you can subscribe to a software or something which is not very expensive, get
Right.
access to a kind of a filtered network of investor who invest in that sector specifically, right? So once you get an access to that, then you understand, okay, what stage do they come, right? Do they come at a very early stage? Do they come at a late stage? And then you try to filter that thing down also. So your first filter, if you subscribe to a platform or you approach on LinkedIn, you see that person on LinkedIn or somewhere, the first filter has to be on the basis of your sector or your
Mhm.
industry. Second filter has to be on the basis of the stage. At what stage does that investor come in? And are you at that similar stage, or you are at a stage lower or above? Then only you can approach. These are the two important aspects how you should filter down the investors. So if you have 1,000 plus angel investor in a community or in a platform, you bring that down to 500 or by to 300 by filtering it to the sector that you have. From 300, you bring it down to just 50 or 60 by filtering at what stage you want. And then you are just left with that 50, 60 to play with. Where you are very targeted community that you are saying that, okay, this is what we are, this stage we are, this is our revenues, etc., etc.
Okay. So I believe Sudeshna got an answer. We have another question coming up. Sudeshna Das. So Sudeshna Das is asking that how does the size and stage of a startup impact its fundraising strategy? Thank you, Sudeshna Das, for the question.
Yeah, thanks, Sudeshna, for your question. So the size and stage of the startup, right? Of course, it's important. Now, if you are at a stage where you're just building your MVP, right, and you're at
Mhm.
that size and that stage, then your fundraising strategy cannot be to VCs. Okay, it cannot be to like a Bloom Venture or a Sequoia or something. It has to be to Startup India Seed Fund scheme to get that grant so that you can start like you can build your product finally and start the scale up or start the monetization, right? Second, now if you are at a early revenue stage, you're doing 5-7 lakhs monthly, you cannot approach to a late stage VC. Your fundraising strategy has to be to family offices, to very early stage angel investors or angel networks, right? Then let's say if you are doing at 1 crore per month revenue, right? Your fundraising strategy should not be angels. It should be either debt funds, NBFCs to get some working capital debt requirement, and to a venture capital fund, right? So your strategy will change and evolve over a period of time once you know your growth and your stage that you are at it keeps changing. So that's how it should change.
Okay. So it does impact. It makes a lot of impact actually, the stage and size of the startup. I believe Sudeshna got
Yes,
her
of
answer.
course.
Yeah.
Yes.
So I will take up another question from the audience. Kumar Gaurav Bhomik. So Kumar Gaurav Bhomik is asking, what are the common challenges startups face during the fundraising process, and how can they overcome them? Thank you, Kumar Gaurav Bhomik, for your question.
So common challenges startups face during fundraising process is ineffectiveness to convey a proper story in terms of your numbers and in terms of your growth strategy and your vision, right? Because there is no proper manner in which that you want to convey that story to an investor. That investor will never get convinced with what you have to say, right? So
Mhm.
first of all, for making him convinced, you have to be convinced properly about your story and your vision. Okay, not just by telling a false story to satisfy your false ego out there, that okay, I'll be able to build it, I can do it 100 crore, I can make it 300 crore, I can make it 500 crore, but to really back it up with proper logic, reason, and rationale, right? That is why when we are working with any startup, right, the founder is always overconfident on his own skills, on his own project, on his own business, everything, right? So more often than not, he is ultra positive, okay, I'll be able to achieve so and so things with my startup, right? It's the most innovative thing. That's where sometimes, in fact most of the times, uh, that's where we come into the picture also. When we bring
Okay.
them to the ground, we have to literally bring him and pull his leg to the ground, that come back on the ground, like let's work on the business plan in detail. Let's figure it out first. What you're saying, is that right or wrong, or you're just done some basic calculation and you're claiming I can create a $1 billion company in 5 years, right? So that is where a very efficient business plan, a proper storytelling comes into the picture, right? That is where we also try to come into the picture. And over a period of time, we have improved on our skills, on our advice that we try to give to the founders also, that how they are supposed to pitch it to an investor, right? Your numbers cannot just be pure numbers, which everyone's
Mhm.
financial model, you can just download it from Google and make it, which every founder is trying to do. But if you're just trying to do what everyone
Okay.
else is trying to do, then you will also get the result what everyone else is going to get, right?
Mhm.
And you're just putting numbers anyone can put. How are
Mhm.
you conveying a story to the investors with your numbers, with your thought, with your vision? That is of prime importance, and that I think is the number one challenge in today's startup founders in order to not being able to raise funds.
Okay. So it's not just mere numbers. You basically have to, portray a real story and a real picture
Yeah,
with,
yeah,
with
yeah, yeah.
reality check. Okay, so I would take up another question from the audience. Aditi Malo has asked a question. So Aditi is asking that as a startup fundraising expert, What strategies have you found the most effective in today's dynamic business landscape?
See, there are no strategies, thumb rule as such, is what I have understood. Every week, every month is a complete new and week, a new month. Uh, Macro environment keeps changing, micro environment keeps changing. What remains constant is the way that you want to approach a particular deal, right? So there have been instances where founders want to raise funds by way of just equity. Then we have to really convince, once we sit down, we create a business plan, we come to know that his growth or his fundraising requirement will not just suffice by equity, but he will require a certain debt. Then we try to convince him that, okay, it's better you go for a 80-20 ratio, 20% take as debt. It will solve your initial working capital requirements. Otherwise, equity is a long term expansion funding that you're getting. Don't use that for your short term working capital. Otherwise, your whole cash flow and budgeting will go haywire, right? So those small things we try to tell them. As strategy, it is not a clear cut thumb rule, step 1, step 2, this is the strategy that it should be. We try to look at every case in a unique manner, in its own respective manner, and try to take it from them and try to offer them solutions accordingly, right? The only strategy that it should be is that you try to go to the right set of investors. Okay, don't go to any wrong investor saying that acha, it is a health startup. We should only be going to, we can go to all the kind of investors that are there in my network. Then I cannot be doing that. I'm wasting everyone's time. My
Right.
effectiveness will go down. I rather go to investors who are interested in investing in health, right?
Right.
That is the manner that you should try to approach. And not so I've also noticed that many of the founders, they just ping investors on LinkedIn randomly, right?
Okay.
With a very cold way of pinging. uh, what I try to say is that don't do that. And even if you're pinging, don't just start talking about funding de do, here's my pitch deck, go through it, and please invest and everything. Try to develop relationship with that investor. Okay,
Right.
how do you do is that you don't talk about funding, you talk about business, you talk about, okay, can you mentor me, okay, can you guide me, okay, don't start asking. Okay, try to see where you can help that investor also. Try by
Yeah.
giving first, right? With that, what will happen is that you will create that sense of trust in that investor. You will create that sense of confidence in that investor. Okay, okay, this guy is trustable, I can invest my
Mhm.
25 lakh with him. Okay, so that's the idea which is like missing completely from today's startup founders. No one wants to spend time in investing in a relationship. Everyone wants, भाई ये लो pitch deck, पसंद आया तो बोलो, let's do a call and you can invest in my company,
Mhm.
you know. So that should not be the case. I think then it is just a transactional thing. It will not be a long lasting
Yeah.
relationship.
Right.
So I think, yeah, that is one.
Okay. So I want to know that it's difficult to balance many things, of course, and you are doing it pretty nice. So I want to know that how do you balance your role as a director at Lakhani Financial Services and your expertise in startup fundraising? Are there synergies that leverage in both capacities?
Yeah, it's the same thing only. It is just a different kind of a name given on LinkedIn. So someone had suggested कि आप ये रख लो, so I have just put it. Otherwise, it is just the designation is director or founder of LFS, and we help startups to raise funds. And I think someone from a marketing team had suggested okay, we need to put this, so have just implemented that. Otherwise, it's the same thing. It's nothing
Okay.
different basically.
One very interesting question is coming up on my screen from Arpita Chakraborty. So Arpita is asking that how do you handle disagreements or conflicts within your team? Can you please share any lessons you have learned about effective team management from your experience? That's a very interesting question, Arpita.
Very,
Thank you
very
for the
interesting.
question.
Very interesting question, Arpita. So, see, how do you handle any disagreements? Yes, there are disagreements that happen with the team, and this is with juniors, with seniors alike. And the way that I try to manage it is that um, there are certain things that I need from the team, from a person,
Mhm.
right, which needs to be delivered in that time, or in that in the due course, which I try to communicate as effective as I can to the team, right. Over and above that, whatever it is, I'll be all yours, and I'll happy to do what you tell me to do, because in that department, in that role, you are better than me, right. So I don't go in an argument with everyone that this has to be only in this manner, right. There are certain SOPs set. We are an organization who have set SOPs, who've set culture early on. So don't just bar that. If there is a system we have created, like when we are onboarding a startup, we have a very clear cut system of how we do, of what role, who is going to send that first email. We have a very documented process, an SOP that is built, right. What the financial analyst has to do, what the pitch deck designer has to do, what the investor relations person, investor and funding analyst has to do. Everyone has a very clear cut role, right. If that is not met, then that's where then I get you know uh, sort of irritated with that, where then I confront that person, right. But if that is met, and your other whatever suggestions are there, feedbacks are there, your anything else that you think that can be done better in that role or in that department or for that client, you suggest, because you are better than that, you're better than me in that, right. That's your role, you're doing it day in day out, I'm not doing it. So you suggest, then I listen to them, and I allow them to prosper in the way that they want to do it, they want to take it ahead. So that's how I try to do. My only one two things
Okay.
I need, rest everything what they need I try to give to them, and try to support them in that. So that's the only that's one way, as what I have learned from other leaders, that we are not the best in everything, so might as well we listen to who are the best in their field, right. Because if that happens, then they will be able to do a much better job than what we can do, or what we could have expected otherwise. So I think that is one
Right.
important thing that I try to do, so that there are minimum disagreements, or minimum conflicts that I can put to basically. And everyone in the team tries to work in that mindset only. After doing
Right.
that, for some time, people have observed. So everyone tries to work in that mindset. Okay, that is his strength. So I can advise, I can suggest, but then final decision is his, what his or hers, whatever he or she would want to take that, right. So
Okay.
that is what we try to do.
That's a really nice, take which you have given. And I'm sure Arpita got her answer, and I'm sure she's going to implement this with her own team.
All
So,
right.
coming to the future prospect, one we know about the 2029 prospect, which you said shared earlier with us. I need to know that what excites you the most about the future of LFS, Lakhani Financial Services, and the financial services to be taken as a whole, the industry to be taken as a whole.
So, first of all, for the industry, what excites me the most is that the government's thrust on the startup ecosystem in India, on entrepreneurship in India. I think we are in that phase, which probably US was 20 years back, during 95 to 2005, 2015, tak, what they enjoyed for 20 years. I think that is what has started in India, where entrepreneurs will really create a huge, massive market cap for India. So that
Right.
is one thing which excites me a lot about, Indian startup ecosystem, and hence the entire financial services and the startup ecosystem that is there, right? And about LFS, a very interesting question. What excites me and what keeps me on my toes is that because there would be such good growth in the startup ecosystem, and because we try to add value in the most genuine manner to our startups. We will get to work with the brightest minds in the ecosystem from different sectors, and try to learn from them, and create an impact in their financial journey of their business, right? So whatever little impact that we can make, that will excite me the most, that okay, somewhere I could we as a team could put some kind of a positive impact on those startups, whichever, how many ever that we can, but we'll be able to do that, right? So that is something that we that would excite me. And hence we had also recently launched a startup fundraising course.
Okay.
So that is
Okay.
something that we did, which could reach to more masses, because it is very easily available at a very basic price point, but would add immense value to a young startup founder who wants to learn the entire fundraising journey and the step by step approach of how to raise the funds.
Okay.
So
Wow.
with that we can reach more number of people. So yeah, that's the whole idea, that maximum number of people that we can impact, that excites me the most
Mhm.
daily. So that's one
Wow.
thing.
That's such a positive thought, to be honest. Okay, so I one more thing I need to ask you, that what advice do you have to aspiring entrepreneurs and professionals and startup founders, and somebody who is looking to follow this similar path
Similar path as me in as a investment
as an
banker.
entrepreneur, as a startup owner?
All right. So I think one important lesson is that don't chase valuation, chase value creation. As a startup founder, that is one very important lesson that I try to learn and I try to give to any of our portfolio companies also, so that you don't just change value, you don't just chase valuation, but you rather chase how you can change the life of someone else by adding some kind of a value with your product, with your service, with your two thoughts, whatever, and that would in turn help you to create uh, you know uh, you know a kind of a good growth or a success for your company or your startup also. So yeah, I think that is one very important lesson which I have learned, and which I try to put it out there across also.
Okay, thank you so much. That was really nice, and it was so insightful and positive, especially for me, speaking
Thank
to
you.
you and to everybody listening to us. It was really nice. And thank you so much. You got time for us from your busy schedule and, could join us on this session today, and highlighted the importance of fundraising in a startup and how Lakhani Financial Services is, out there helping the startup with everything
Yeah,
in a whole. Yeah.
yeah.
So also about the courses which you have launched, about the startup fundraising courses which you have, recently launched, which is like, is a go-to for anybody who is looking to learn something like that. And also the vital products and services like Honey Financial Services is offering. And we are extremely grateful again, and, to enlighten us. Do you have anything to share with us before we,
uh,
end up?
No, nothing much. I would just like to say that thank you, Shreyashi, for hosting this very well, and for inviting me. And we've been coordinating for the last I think 10-15 days, and finally we could do this today. But
Yes.
and so sorry if there has been any delay from my end in terms of replying or something, but it was amazing to be here and to talk to you and to the entire to your audience. Wonderful questions from them, so thank you everybody in the audience also to ask such interesting questions. I hope I could answer them, and would love to connect with all of you guys and stay in touch. So thank you Shreyashi for having me, and
Definitely,
thank
and
you
you're
the
most welcome, Mr. Lakhani.
Unfiltered
Have a
Chat.
very nice day. Yes,
Thank you,
absolutely.
thank you. Thank you.
Welcome. Bye. Okay, so that was Devansh Lakhani from Lakhani Financial Services. And thank you all of you for joining us today on this session. And thank you for your questions. They were so enlightening. And we got to know so many things about the financial sector and the industry, how it has been growing for so long. So we want to remind you about Brainium Academy. So Brainium has launched their coding courses. If you want to become a software developer, if you want to become an application developer, if you want to become a digital marketing expert, contact us at 8100737706. We are also having a holy offer where we are providing free internship with all of our courses. You'll get an internship certificate along with your course certificate, and we are offering 100% placement assistance. So once again, thank you everyone, and keep the conversation alive until we join you for the next session. Bye.